Hey everyone, and welcome back to the channel. Today, we're diving into a topic that might not be the most glamorous part of running a business, but trust me, it is absolutely one of the most critical. We're talking about bookkeeping and keeping good accounts. Whether you're just starting out or you've been in business for years, getting your financial records in order is the key to stability, growth, and honestly, a lot less stress. So grab a coffee, and let's get into why keeping good accounts is your business's superpower. First things first, why is this so important? Well, think of your accounts as the health report for your business. They tell you exactly what's going on, where your money is coming from, and where it's going. Without accurate records, you're essentially flying blind. You can't make smart decisions, you can't plan for the future, and you won't know if you're actually making a profit until it's too late. Good accounts help you track your progress, spot potential problems early, and give you the confidence to invest in your business's growth. Plus, when it's time to deal with taxes or apply for a loan, having everything organized will make your life a million times easier. Let's start with the foundation of good bookkeeping, your bank statements. It's absolutely crucial to have a separate bank account for your business. Don't mix your personal spending with your business finances. It creates a messy, confusing paper trail that's a nightmare to untangle later. A dedicated business account gives you a clear, chronological record of all your transactions. Every month, you should go through your bank statements line by line. Match each transaction to a receipt or an invoice. This process, called reconciliation, confirms that your records match the bank's records. It helps you catch any errors, fraudulent charges, or even bank fees you weren't aware of. Think of your bank statement as the official story of your money. Your job is to make sure your own records tell the same story, with all the details filled in. Now, let's talk about the unsung heroes of accounting, receipts. I know, they can be a pain. Those little slips of paper that seem to multiply in your wallet or the bottom of your bag. But every single one of them is a piece of evidence. They are your proof of purchase and your justification for business expenses. In this digital age, it's easier than ever to manage them. You can use a simple showbox system, but I highly recommend going digital. Use your phone to snap a picture of every receipt as soon as you get it. There are tons of apps out there that can help you organize these images, and many can even extract the data for you. The key is to be consistent. Create a habit. Get a receipt, snap a photo, file it. Done! This protects you in case of an audit and ensures you are claiming every legitimate expense you are entitled to. So, what counts as a business-related purchase? This is a question I get all the time. The simple rule is, if the purchase is primarily for your business operations, it's a business expense. This goes way beyond the obvious things. We're talking about office supplies, software subscriptions, marketing costs, professional development courses, and even the mileage you drive for business-related trips. It's vital to understand what you can and cannot claim. For example, if you're in a specific industry like farming or agriculture, your business-related purchases will look very different. You'll be tracking things like feed for your animals or new stock you're bringing in. Let's use that as an example. If you run a farm, buying feed is a direct cost of doing business. It's a necessary expense to keep your livestock healthy and productive. So, every time you buy feed, you need to keep that receipt. It's not just a bag of grain. It's a documented business expense that reduces your taxable income. You should be meticulous about this. How much did you buy? What was the cost? When did you buy it? Keeping detailed records for these types of specific, industry-related purchases is essential for accurately calculating your cost of goods sold and, ultimately, your profit margin. Similarly, let's talk about stock. If your business involves selling products, your inventory, or stock, is one of your biggest assets. You need to track it carefully. This includes the initial purchase of stock, also known as inventory. When you buy products to sell, that's a business expense. You need to record the cost of that stock, the quantity, and the date you purchased it. This isn't just for tax purposes. It's for managing your business effectively. Knowing your stock levels helps you understand what's selling well and what isn't. It prevents you from running out of popular items or being stuck with a warehouse full of products nobody wants. Good stock management, which starts with good record keeping, is fundamental to a successful retail or e-commerce business. Now, let's bring it all together and talk about the big picture, your income and outgoings. At its core, this is what bookkeeping is all about. Tracking every single penny that comes into your business and every single penny that goes out. Your income is all the money you receive from sales of your products or services. You need to record who paid you, how much they paid, and when. This is your revenue. Your outgoings or expenses are everything you spend to run the business. This includes your stock, feed, rent, utilities, salaries, marketing, and all those other receipts we talked about. By regularly tracking your income and outgoings, you can create two of the most important financial documents for any business: the profit and loss statement and the cash flow statement. The profit and loss, or P&L, tells you if you're making money over a period of time. It's your income minus your expenses. If the number is positive, congratulations, you have a profit. If it's negative, you have a loss, and you need to figure out why. The cash flow statement tracks the actual movement of cash in and out of your bank account. This is critically important because you can be profitable on paper but still run out of cash if your clients are slow to pay. Understanding both is key to financial health. Putting a system in place doesn't have to be complicated. You can start with a simple spreadsheet. Create columns for the date, a description of the transaction, whether it was income or an outgoing expense, and the amount. As your business grows, you might want to invest in accounting software like QuickBooks, Xero, or Wave. These tools can automate a lot of the process, link directly to your business bank account, and make generating those financial reports as easy as clicking a button. The best system is the one you'll actually use consistently. So, find what works for you and stick with it. Don't let it pile up. Set aside a specific time each week, maybe every Friday afternoon, to update your accounts. Making it a regular habit is the secret to staying on top of it all. So, to recap, get a separate business bank account. Keep and digitize every single receipt. Understand what qualifies as a business expense for your specific industry, whether it's software or livestock feed. Meticulously track your stock. And most importantly, have a consistent system for recording all your income and outgoings. Doing this will give you a clear view of your business's financial health, empower you to make smarter decisions, and save you a world of headaches down the line. It's not just about crunching numbers. It's about building a stronger, more resilient, and more successful business. That's all for today's deep dive into the world of bookkeeping. I hope this has been helpful and maybe a little less intimidating than you thought. If you have any questions, drop them in the comments below. I'll do my best to answer them. Thanks so much for watching. Don't forget to like and subscribe for more content to help you grow your business. See you in the next one.